Welcome back. Markets doing quite well. We're up close to around 60 points. And the Nifty Bank, the one that we've been spotting, that's the one that's been leading the charge. And in today's trading session, it's doing an outperformance. But the Nifty Bank can only do so much. If the markets need to move up, you need some support coming in from the tech space. So let's discuss that. We're now joined by Sumeet Jain, Senior Research Analyst, CLSA, from the CITIC CLSA. India Forum 2025. Hi, Sumeet. Good morning. Good to see you win. We had a brief take from Vikas the last week about IT, and you all have a contra call out there. And, that would be your big call. So tell us the top factors that are making you positive on tech, while, most on the street are a little bit cautious on the sector with regard to growth, with regard to challenges, as well as the global headwinds. Please go ahead.
No, yeah, surely. Good morning, firstly, and thanks for having me on your show. So we have actually been quite positive on the sector almost for last 6 to 9 months, primarily because of the medium to long-term opportunity around GenAI. I think there has been a lot of talk on the street that there will be a lot of deflation impact because of GenAI on the existing revenues. But on the contrary, we believe that the technology stack is so complex to build GenAI applications that you need IT service companies to integrate those solutions. And that's where, we did a lot of in-depth research last year, and we came out with this GenAI report early in the year in March, and then followed it up with the GenAI Access Days, where we hosted experts from NVIDIA, Salesforce, people from across technology stack, and they all have to say that they cannot implement their solutions without the role of system integrators. And that's where, I think this year the sector got impacted because of tariffs. But I believe the general narrative on the street that GenAI is going to have a negative impact on IT services, we don't buy that argument. And in that context, if you look from a macro cycle, we believe that next year is going to be a stronger growth year for Indian IT, in the sense that it's a midterm election year for US next year. If you look at S&P 500 earning growth, as per Bloomberg consensus, it is at 13% right now for the next year, which is higher than last 10-year average of 9%. And as you know, 60 to 80% of revenues for Indian IT come from US geography. That clearly has a positive tailwind for the entire sector. So structurally positive as far as GenAI is concerned. And mind you, the way cloud technology has evolved over the last 2 decades, AI is ahead of us over the next 2 to 3 decades. So it's not just a 1 to 2 year cycle, but a multi-year cycle where system integrators will have a big role to play. So Sumeet, positive both from cyclical and structural perspective.
Sumeet, hi. Great to have you with us. And this comment that Vikas made last week when he was with us in the studio, it really stuck with me, because I think you all are the very few names on the street who are actually calling for a positive view on IT and saying that, and I remember what Vikas said. He said that Indian IT typically has been not too great at inventing a new technology, but we've been among the best adopters. I mean, using that technology and really, going up the growth curve. So just expand on that. I mean, how do you see this playing out? Because a couple of things are stacked up. One, the disinflationary impact. You just don't need so many people to do more mundane tasks within IT as well. And we've seen maybe some sign of that, maybe not fully. For instance, the TCS layoffs, though they're not equated to AI per se. So just explain the disinflationary part and why you think that's not going to be a problem. And also more structurally, in a world where investors are looking for the technology inventors and creators, I mean, the NVIDIAs of the world, I mean, does Indian IT really stack up? Is it really going to get investors' attention?
No, yeah, I think, the key point, if you look at how Indian IT has reinvented itself over the last 3-4 decades, is by reskilling of their employees around the every major technology cycle and making sure that they are involved with their clients to understand their enterprise workflows. And I guess this is where, even if you look at the current GenAI cycle, the enterprise workflows, the domain expertise is what is required to implement these GenAI applications. And mind you, GenAI is just 4-5% of the overall revenues of these companies. So I think the way why we are positive that, they will be able to adapt is the reskilling of employees is happening at a rapid scale. Now in the GenAI world, you need to deliver your solutions along with agentic AI and AI agents. We visited HCL's AI lab just a couple of weeks back, and they showed us how they are integrating their AI agents along with the market available agents like Microsoft Copilot or Google Gemini. So the point is revenue per employee will pick up for all these companies. It will not be a headcount driven model anymore. And that's where I think all the companies, if you look at the last 3 years, the revenue per employee metric has been moving up. And probably we see that metric to further move up. And that I think will be a key thing for us to watch, that yes, these companies are reinventing themselves. So maybe I don't know what it implies for the job growth in India. But as far as these companies' revenue growth or profitability is concerned, we are very confident that they will be able to revive themselves. And the recent quarter results was a reflection of that.
And it's great you're sharing that, because we, as people in the media and of course the analyst community, perhaps we'll have an absolutely new way of reading IT company results. And maybe that metric that you mentioned, revenue per employee, that's going to become a big part of how you measure and gauge productivity. Just in terms of revenue growth, by which quarter will it start showing up in the actual revenue growth number? Is it going to be Q2 FY27, Q3? I mean, what are we talking?
See, I think, first of all, we need to understand that this is a mature sector. These companies, in terms of market share penetration for Indian IT, it's already at mid-teens. So we are talking about a growth for these companies probably in mid to high single digits, not in double digits anymore. But these companies are very strong free cash flow generating companies with a very good dividend payout. And that's where, I think the growth for the sector, we believe, will be somewhere in between 5 to 7% in FY27, which will be better than what we have seen in FY26 because of tariff-related concerns. And I think to another point, why we believe that GenAI is not having a huge deflationary impact is also because BFSI, which is actually seeing tailwinds in US, grew at high single digits to low double digits this year. Even the order booking momentum has been pretty strong. So to your question, I think we have already seen some recovery signs in the recently concluded quarter. And I believe that with a strong order booking momentum, the YOY growth numbers should start picking up from 1 to 2 quarters from now.
Okay, so that's on the growth. Very quickly, just walk us through, by the time we get to this middle of next year, average, what will the margin profile look like? Are you expecting, because of this adoption of GenAI, are you expecting 100 basis points overall dip in margins, 50 basis? If you're not expecting, then tell us. And just a quick last point on the use of that cash that you said. I mean, great cash war chest, but that's also been one of the biggest criticisms of Indian IT, that maybe they're just not aggressive enough, not looking at quicker reinvention through inorganic growth.
No, yeah, I think there is a clear dichotomy, probably I would say, between the large caps and the mid-tier companies around acquisitions. And I would say probably the global IT companies, particularly Accenture, they have been far more acquisitive, and particularly when a new technology cycle is getting initiated. So probably I think Indian IT companies will have to learn from how the global players have operated across cycles in order to reinvent themselves much faster than those global guys. And in terms of acquisition, it may not be a large scale-based acquisition, but more of capability-led, where they are either entering into new set of capabilities or into new set of clients or new set of geographies. So I agree. I think some part of that cash need to be invested on the M&A side. And I think as far as the aggression is concerned, we have seen some initial signs from TCS planning to invest probably $5 to $7 billion over the next 5-7 years to build data centers. Now, obviously, they are being aggressive, but probably market is not appreciating that fact, maybe because it will have some impact on their free cash flows and ROIC. But yeah, I think they need to be more acquisitive on the M&A side. And I guess to your another question, on the revenue per employee metric, that definitely will be the key thing to watch out for. Can you just, remind me your first question?
Margin, just in terms of margins over the next 4 quarters, should we expect them to go down, stay where they are? What should we expect?
So yeah, on the margin side, we expect them to be very stable, will not have a material impact given the fact that in terms of investment, they largely need to invest on employee reskilling. So there might be some impact on utilization from that in that regard, but no major capex is required. And on the margin side, I believe rupee depreciation will continue to remain a tailwind the way it has been over the last several years. And revenue per employee and pricing, those are the 2 key metrics to watch out for. If they are able to take that up, that will more than offset the investments required to reinvent themselves in the GenAI world.
Yeah. Sumeet, more questions, but out of time. Have a good conference. And thanks very much for joining us here on CNBC TV 18. So that is Sumeet with CLSA. From the sidelines of the conference, a view as far as IT services in India goes. Well,